Hello and welcome. This is the round 4 wrap up of the Zoom simulation. And let's review the charts page here. And we could see that this is the net profit per team. And we, for the first time ever, J&R Auto is not number 1 in profits. We have a new profit winner, and that's HL Brook. Has the new, with Zoom Automobiles coming in a close second. And let's see. Yeah, so let's see if I can match. Hard to match their color up. Oh, here we are. Okay, so at 42, still a decent improvement in profits, but falling a little bit behind compared to the other companies' growth. So pretty interesting round 4. We have a new leader in profits. Now, you can see that the trend line is increasing here, and as the simulation goes by, you should be making more and more profits. Why? Because sales are going up. Sales are increasing. Also, if you've been doing your job and making operational investments, your cost reductions enable you to increase your profit margins, and that should be another reason why your profits are moving higher. Okay, if we look at points per team, only one team lost points, and this was mostly because of too much borrowing of debt, which that might have been, I'm not sure, it might have been a mistake. They might have tried to retire it instead of put it in the additional box. But debt is an important thing, especially by round 5. You should start paying down your debt, long-term, short-term, and buying back stock to help improve your year-over-year results. And I'm sure once that person corrects this, they will bounce back next round. And as far as points, our leader in points this round, Samurai with 562 points, Motor Group 538 points, Prime Autos 508 points. So 500 points was the best, and that's typical for round 4. Remember, it gets more difficult moving forward to keep making over 500 points. So if you got around 400 points this round, that is doing exceptionally well. And if you're somewhere between 300 and 200, that's still very good. So just keep an eye on your total points, because that's what gives you a grade for this simulation. But it's nice to see that teams are still making decent points for the rounds, and we'll go over the points in a second. So stock price, we still have our same leader in stock price. And one reason they're able to maintain their leadership is that they've been buying back stock. They've been watching my videos, I think, and I'd like to take credit for it. But somehow they knew they were smart enough to buy back stock, and that reduces their outstanding shares. It helps them to have the highest stock price. Because when you buy back shares, it also drives up demand for your stock, and your profits in comparison to the amount of outstanding shares definitely helps. And also, their strong performance in previous rounds also helped keep them on top. Okay. All right. So if we look at sales per team, okay. So this student may I don't know. This student hadn't complete the last 2 rounds. They may have dropped the course. I'm not sure, but everybody else has moved up quite nicely in the pack, and we have a top. Edison Auto is on top with sales, but there's a few companies up here at the top. Sonic. There's one more. Oh, WWCTT. So that's great to have, to be in the top. Even the top half of sales is great. Just got to make sure you translate those sales into profits, because if you're selling things at a loss, your company's going to go out of business. It reminds me back in around 2000, there were 2 companies that were becoming very big for online retail, Amazon and Buy.com. Amazon's strategy was to sell things at a small profit margin and try to make large volumes of sales. While Buy.com, their strategy was to sell things at a loss to get even larger volumes of sale and try to make money back on the advertising on their site. Well, turns out selling every product with the $5 loss or $10 loss on it is a bad idea. And they went private, and then I think they're out of business or restructured. So you want to make sure you have those profits on your sales. Okay, so earnings per share. This team, we covered their earnings a dip due to excessive interest rates. So if you borrow too much money, your interest rates keep going up the more you borrow. When you pay down your debts, your interest rates go lower. So that could greatly affect, because the more you borrow, the more risky your company is, the more creditors want to issue new money at higher interest rates. So you have to, and your interest rates are floating, so the old money you borrowed also gets higher interest rates. So you want to pay down the debt as you can. And we have, so J&R Auto was the absolute leader in earnings per share, but two teams overtook them as they increased their profit margins and overall profits. So you want to, so these two teams obviously have been studying, watching the videos, looking at the competition, making some smart moves, and really stepped up their game. And that's what the simulation is all about. It's difficult to always be number one every round, because people are seeing what you're doing, and they're learning from you as well. So, okay. So let's go back up. Let's switch to the leaderboard. Okay, so here's the leaderboard. This is the current points for the round, and we kind of covered this already, who had the top points. And, it's almost like a natural dispersion of points here as far as how spread out it is. Okay. And some people at the top, or, these two teams at the top, beat 96% of everybody who's played a simulation in the past year or so, which is, they tell me, is over 5,000 teams. Gross profit margin, again, the top, it's no surprise that the top performing companies have the highest profit margins. They're in the 60 percentile range. Although I'm glad to see a number of companies took my advice over the last review I did and moved their profit margins out of the 40% and more into the mid to higher 50% range. But you still have to move these higher. And the people down here, people who are at this, these teams at 42 to 33, I don't think they're watching my videos. I talk about this. I sent out an email about helpful hints about profit margins. I made 3 videos already. This is the 4th one. And in the lectures, for the strategy lectures, I also talk about profits and talk about the simulation. So something's not getting through to these companies, because their profit margin after 4 years of running the company is pretty much the same as the day they took over the company. And that's a bad thing. So they have to work more at increasing profits by increasing sales price, reducing costs. There's only 2 ways to reduce costs in this game: by operational investments on the production page, or lower your features on your cars. Okay, so let's move forward. And stock price. So we have, like I said, JR Auto has the highest stock price, and that's built on the fact that they were the leader for most of the simulation, but people are closing in on them, hitting the $100 mark. And down here, if you're under $60 on your stock price, you're vastly underperforming. Your company is underperforming. Okay, return on equity. Again, equity is the amount of stock dollars you have. So it's the amount of outstanding shares times stock price. So your equity you look at your equity in proportion to your profits. So you want to grow your profits faster than your equity is growing. So as your stock price goes up, your equity is going to grow. So you have to make sure your profits grow even faster. So return on equity, you can't get huge gains here, but you can get some gains. So it's difficult, because the better you do, the faster your equity grows. So it's very difficult to grow your profits faster than your equity in this particular game. So don't look for a lot of points here, but you should always try to, hopefully moving forward, becoming a little bit more positive in earning points on return on equity. So if your return on equity is negative, earning a few points, 5, 10, 20 points in this area is great. If it's negative, you shouldn't be too concerned, but that is a warning that you need to increase even more greatly the amount of profits. Okay. Total points. Okay, so one team after 4 rounds has almost reached the 2,500 point level for the full grade on the simulation. That doesn't mean they get to stop playing. They want to continue through, because they want to make sure that they continue with their lead and they don't lose points, because they could go backwards. So most teams here are over 2,000. That means if you're over 2,000, you only need to earn 250 points for round 5 and round 6, which is pretty easy to do as long as you keep making all the right moves. Now, if you're under say 1,700 points, you got to really kick ass the next 2 rounds to get the full points of the simulation. And again, the way to do that, profits, maximizing shareholders' wealth. That's why you run a company. That's why corporations are formed. That's why investors invest in companies, because they want their investment to be maximized. So you have to maximize your profits, and that's what companies do. They don't talk about it. It's like you running around saying, I'm rich, I have tons of money, look how profitable I am, I'm so rich. That makes jealousies, and that makes people, normal, friends, upset, and they'll be jealous of you. That's the same thing with normal consumers. Normal consumers don't like companies running around saying how profitable they are. And look, we sell products to you that make us money, and buy our products because you're making us money. No, that's never the message. That's the message to shareholders. But to common folk who buy their products, the message is, hey, we're doing everything possible to give you the best product. We're practically going broke, giving you so much and charging so little. That's the message they send. So a lot of people, when they play this game for the first time, they think that's what companies do. It's not what companies do. Behind the scenes, behind the advertising, behind the false face is, let's make as much profits as possible because that's why we're in business. Now, I'm not saying make profitable in an unethical way or make profitable profits in a way that's illegal. I'm saying doing everything that's fair and right, but maximizing profits in the process. Okay. Operating profit margins, again here, the thing that steals most money away from operating profit margins is advertising. So advertising is the necessary evil. If you make cars that aren't the best made cars in the industry, you have to advertise more to sell them. Just make sure that your profit margins are high enough to support the advertising levels. And that takes a little research and analysis. So if you can advertise $20 million, you should look to see, I'm going to sell 7,000 vehicles at this profit margin per vehicle, which it tells you on the sales page, and you can say, okay, I'm making 60 million in a car, I can afford 20 million advertising. But if you're only making 20 million on a car and you advertise 20 million, you're throwing all that money away. And you may be over advertising, because once you hit a certain point, every new dollar you spend in advertising is buying less customers. So the first, say $1 million buys the most customers. The second $1 million may buy 3/4 of that, and the next $1 million a half of that. So the more money you throw at it, there's diminishing returns in advertising, because there is a thing of advertising too much, and that's when you spend too much on it. Okay, our earnings per share, again, this is directly related to 2 things: your total profits for the company and the amount of outstanding shares. So if you want your earnings per share to go up, increase your profits, decrease your outstanding stock. Okay, return on assets. Again, this, if you grow your assets, you may have a round where you grow your assets pretty fast. You buy a lot of operational investments. You have to buy more plants, and your assets grow pretty quickly. Or if you have a lot of leftover inventory, your assets may grow faster than your profits, and that's when you'll see negatives in this area. But if you can get more profits out of your existing assets, this will go up. So return on assets, really looking at how many profits can your asset generate for you. So for example, if you own a house and the house isn't generating any profits, your return on asset is nothing. But if you buy a house and you rent it out to 16 college students and you're making a $5,000 a month profit, now you're having a return on your asset. So ROA is return on asset. It's the amount of profits your assets generate. So the more assets you have as a company, the lower this will go. So I'm not saying not to get assets. You need assets. You just want to make sure that your capacity utilization of your assets is high enough to generate enough profits to justify them. Net profit margin, this is basically taking out the interest. So if you look at a good example here, if you look at, Luxury Motors didn't have much. Okay. So let's look at, operating profits. If you look at Luxury Motor Company, they're an interesting example this round. They made a small mistake in taking out too much debt. So they had a 63% operating profit margin, which is actually no, I'm sorry, that's the percentile rank. They had 25% operating profit margin, which isn't too bad. However, when you get to your net profit margin, because they paid so much money in interest on their debt, they whittle that down to 1% because they have too much debt, paying too much interest. And that happens to a lot of companies. And why it's so risky is that your company is on the verge of bankruptcy if you have too much debt, and that's why they raise the interest rates. So again, to get better net profit margins, you want to pay down debt. Sales revenue per share is just increasing your sales, and your sales divided by outstanding shares. So if you borrow a lot of stock, you get more outstanding shares, this number will naturally go down. So buying back stock will help to improve this number, and also making more revenue and more sales. Okay, the total asset turnover. This is a very difficult category to make a lot of points in. Basically, you're hoping not to lose points here. And if you do lose some points, it's not always bad because you're investing in a company. So you're looking at how your assets generate sales. So if you buy a lot of operational investments, that may, in the round you buy them, you're going to have all these assets, but they're not generating any sales. So your total asset turnover will look like it's going lower as you're buying more assets, factories and operational investments. But if they turn into more sales because you can make a more demanding car, or you can spend more in advertising because you have more profits, and you can take the assets you have and generate more sales, the total asset turnover will go up. So in the middle of this game, rounds 3, 4, even 5, it's hard to really, because you're taking on a lot of assets to get your company in a maximal position. By round 5 or 6, you'll probably purchased all the assets you need as far as operational investments. Hopefully you've maxed them out, and you should see an increase in the total asset turnover in the last 2 rounds of the game if your assets becoming more efficient. Okay, so that is a recap of that. So let me go into my demo game. Okay, in my demo game, I'm in year 5. So the first thing I do, I'd look over my overview points and see that my profit margins here left off at 60%, so I have to do better than that. And so that's an important thing to know, my gross profit margins. I paid down my debt, so I earned points back on that. My operational net profit margin were lower, mostly because I think I advertised a little bit more than usual. My return on total asset turnover increased, and my investments that I made a lot of investments last round that not going to pay off to this round, so that's why I'm seeing a lower return on investment, or equity multiplier, ROI, return on investment. Because when you make these investments in the company and they take a year before they come true, you're going to have a lag before this result's going to get better. Let's see, return on equity. I increased my equity substantially, which didn't increase as fast as my equity. My profits didn't increase as fast as my equity, so that's why I lost some points here. But that's okay. I'm going to make that up next round. My earnings per share went up, and my equity went up from $500 million to $850 million, and that's why my profits didn't keep in pace with the growth of my equity of my shares. My book value went up, and the only area of my forecast was off was in luxury. So, and I made some money by making more operational investments. I get points for that, and I had a surplus. So let me look at my. Let's see. Okay, so only luxury. I had 128 cars that weren't sold in luxury. But the first thing I should look at is my performance charts, and I see here that I undersold. I could have sold more sedans, and I was pretty good on the end trucks. I came in 400 lower on trucks and 600 lower on sedans. So I got to remember that when I'm forecasting next round. So I would go in and I'd look at my marketing, see how I compare to my competitors. Maybe I'd look at the sales charts per vehicle and check out the industry charts. The industry page is where I look to see how are these other companies, where are they beating me, how are they making a better car, where are their cost reductions at, to get an idea of how I'm competing. Then in the sales, I got to redesign my vehicles. I have a pretty nice operational cost reduction here, so I'm going to go in and I'm going to redesign my cars. and with the idea of I have to beat that 60% profit margin, which I did here, not by much though, but it's hard with the economy class. Typically, you don't make a super amount of profits in the economy class. And the profits are usually made more in the industry on the luxury brands. And here, 63. And again, I'm struggling. It seems like I'm struggling to really break out of my profit range. And I think that's because I haven't invested as heavily as I should in my operational cost reductions. And that is hurting me. And again, when I do these rounds, I am doing them rather quickly. So I'm not putting in the amount of research that you guys have the time to do. Because here I'm just trying to demonstrate. Okay, so I'm going to see if I can make back a lot more profits on my, oh, even the luxury brand is hard for me to really, so I'm having a trouble trying to really pump up my profits this round. It's still certainly higher than 60%, so I think truck is my weakest area. So I'm going to have to reduce some of my, try to get this up. Okay, so that's higher than 60. So I have each of them higher at 60. Not as high as I would have really liked, but okay. Trying to make the most of it. All right, so let's go to the submit the sales. Now the marketing I'm going to do offline because that's a little tedious, takes me a little while, so I don't want to sit here and watch. So I'm going to do this offline and I'll be back for production. Hold on. Okay, so I'm back for production and I have to buy some more plants, which is going to hurt my total asset turnover, but I'm going to try to do the best because I don't want to not buy plants if I have cars I can sell, because it just doesn't make sense. So I'm going to buy the plants because I have cars to sell at a profit. So you can't avoid you can't avoid having to buy assets. You need to buy assets in this game to make your company grow and move forward. Though, as long as you can make those assets profitable and generate sales and profits, it's worth it. Okay, so I'm going to really pump up my operational investments because I need to get my profit margins up, and without increasing my operational investments, I'm going to have a really hard time doing that. Okay, so let me submit that. And let's see, hopefully I have a surplus. I do have a decent surplus. So I'm going to buy back some more stock. All right, so let's see how I did. I'm going to process the round and let's see how I did. Okay, 400 points, not bad. That's about, around, you remember, 405 points is really good for the advanced rounds. So I was able to increase my profit margin, and all my profit margins increased. My total asset turnover went down. Remember, I knew that was going to happen because it didn't go down too much, but I bought a lot of extra assets that I haven't yet fully utilized to generate a lot of profits. So next round, these assets will be even more profitable. I'll see this move up. It made a lot of it. Return on equity was flat. Return on investments, small amount. And I was able to increase my capitalization, my book value. My forecasts were all on target except for truck. So, and I had 80 points in operational investments, and I had a surplus. So I guess if truck was the only thing that I over forecasted, which isn't bad, so I missed one. But look at my sedan, my economy class is only off by 7 cars. This is a pretty tight forecast. Okay, so that's sort of how I would do in my particular demo company, round 6, is facing. And I constructed it in a way to show you some of the problems some of you may be having trying to get those profit margins up significantly from round to round. So sometimes you're stuck. If you find a hard time getting higher, then you should be getting 5 to 10% increases in your gross profit margins each round. If you're not getting that, you got to look to the operational investments. Okay, so that's it for today, and hopefully you found this helpful.